Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video. Welcome, ladies and gentlemen. Today we will take a look at the Great British Pound. I have decided to skip the update on the euro currency because the situation hasn't changed significantly since our Friday analysis, although the non-farm payroll release has brought significant volatility on the market, but it's still the action that we have seen on Friday is still insufficient to make the final judgment on possible direction. Since market still stands around our major level that we have discussed on Friday, I mean on the euro currency. And depending on how market will behave around this level, will and should give us the clarity what to expect in the short-term perspective. And the situation was not clarified on Friday. So that's why today we will not prepare the weekly update on the euro currency. Also, guys, right now we probably should acknowledge that Australian dollar setup that we have discussed at the eve of the New Year's Day almost has hit the target, so it has happened very fast. That was the 400 pips potential of this trade, and just few days ago I still thought about the possible preparing of the weekly research on the Australian dollar, but I have taken a look at it and it's almost hit our target. So that's why currently setup was really perfect. If you have read it or you have viewed our daily update on Australian dollar that we have prepared at the end of the December, so that was really very nice setup and it's almost has done. Right now, guys, we see potential with the two major currencies, the New Zealand dollar and the Great British Pound. And the Great British Pound that we will discuss today, in fact, this is not something new that we will discuss. We tracked the Great British Pound within the whole year, and we have prepared and specified our view long term ago. So it has happened not probably even in 2015. It was happened probably even earlier. And since then, we are going step by step from this setup, and we'll update it gradually. On the New Zealand dollar setup, it's a bit relatively new, and we see right now the great potential on the weekly chart that could really become the nice trade. But since it's a bit longer term analysis on the New Zealand dollar and still has some room to develop, I think that we could postpone the weekly research on the New Zealand dollar on the next week. So today we will take a look at the Great British Pound. On the Japanese yen, guys, I also have to say that our expectation that it should go down, I mean the currency pair right now is coming to life because Japanese yen takes the more strength against the United States dollar. This mostly is happening due to the risk aversion. And the patterns that we have discussed is continuing to forming. I mean the double ripple sell on the monthly chart on the Japanese yen. That is the major pattern to watch for. And second is the head and shoulders pattern on the weekly chart. As we have said 2 weeks ago, the first destination will be the neckline, and Japanese yen almost has reached it. So just a few distance stand till the neckline. So now let's turn to the Great British Pound. Guys, if you would like to know the fundamental background of our view on the Great British Pound, in today's weekly research, I have posted our former weekly researches where we have provided our farmers with a fundamental analysis on the topic of the Great British Pound, and particularly it stands with the Bank of England policy and the fundamental part of the United Kingdom economy. We see the contradiction among this among these subjects, and this leads to some for most traders, this leads to the a bit surprising price behavior on Great British Pound, but not for us. And we think that this tendency will continue. So if you would like to learn more, to understand this subject totally, you could read our former analysis. I have placed the links to these threads in our forum, so you could find it in our most recent weekly research. Also, guys, I suggest you to read the monthly and weekly analysis as well, because by looking on the daily chart, you do not see whole the picture. And if I will not explain some moments that stands on the weekly chart, you will not understand why we think so. For example, here we expect a possible upward action on the Great British Pound, but by taking a look just on the daily chart, you could ask why we are expecting that, because the thrust down is perfect, no signs of the possible upward action. But the major reason for this upward action stands on the weekly chart. So here, guys, in fact, we have the monthly pivot support one that stands here, and we here have the weekly oversold. So market right now stands at the weekly oversold and monthly pivot support one. So this is really solid supportive combination. That's why here market could turn some to the upward retracement. Taking into consideration that market at weekly oversold, it very often happens. So there's some proverb exists that reaction is equals to the counter reaction. It means that if market hits the oversold on the weekly, Great British Pound could reach the overbought on the daily chart. Other words speaking, when market hits the oversold on the high time frame, you should expect deeper retracement, and the nearest fib levels will not be useful for you because they will be broken with a high probability. That's why we will take a look at the next area. And our major level to watch for is the potential destination of this retracement stands right here. I will explain why we think so. First of all, this will be daily overbought. And this will give us the additional protection because market hardly will pass through the overbought just easily. Overbought at some kind of the absolute level that should hold price action, especially on stands with the retracement. Also, guys, currencies, the financial markets, they feels very uncomfortable above the overbought and below the oversold and usually tends to abandon these areas very fast compared to the commodities. Commodities could stand above the overbought and below the oversold for a long period. So that's why the overbought is very important. Second, guys, we have here the monthly pivot point that has been tested yet within the current month. That's why it will be an additional magnet for the market, since we know that markets usually have the tendency to touch the pivots within the period that they have been formed. So since we have the monthly pivot, it should be tested in January. And finally, guys, here we have very nice resistance, the confidence resistance 149.60, 150 even, let's call it 150 even. So certain area around 150 will be the possible destination of this retracement. That's why first we will be looking for this area. So since we prepare the daily analysis and mostly we have the bearish setup, we do not call you to trade this setup on the long side of the market. This is mostly for the scalp traders. For us, the major task is to get the right place to take short position. And currently we think that this area will be suitable for that purpose. But here, guys, on the daily chart, we have only one part of the puzzle, since we know only the possible destination, but we do not have the second one. The second one, usually the pattern that should lead us to this point. And since market just has hit 145 area, it hasn't formed any patterns yet. That's particularly what we will be watching for on the next week. What patterns could be formed here? First that is coming to my mind is, of course, Napoli directional, because take a look, we have nice thrust down. This retracement is nothing because it hasn't hit the 30% fib level. It means that we should treat it as the whole thrust without no interruption, since here was not even minor retracement has happened. Since we have the thrust down, here we could get, for example, double repull buy. In this case, it could lead us right to this area. This is one pattern that could be formed. Maybe market will form something else. Also, guys, I would like to say those of you who hold long-term bearish positions, since market has hit our first destination point, it's 135, 145, it means for you that probably it makes sense to take profit partially on the whole and to tight stop on other part of your position. So just think about it, because market could show the meaningful retracement up. If it will happen, you will be able to apply the scale in trading and add more to your position somewhere at the better levels. And at the same time, you do not need to close the whole your position. So you could keep the half, for example, and trying to take the second one at the retracement. So think how to manage your position, because keeping the whole position and meeting the opposite retracement for the 500 pips, it's not really attractive situation. Now about the possible scalp trading of this possible bounce. Guys, this is only for those of you who try and like to trade this scalp and have the skills to do this. We do not call you to do this, because for us, as I said, major task is to get the good short position. If you still would like to trade it on the long side, be extra careful, and probably the hourly chart that you will need. Take a look at what we have on hourly chart. On the hourly chart, market stands in the downward channel, keeps very well harmonic swings. So you can see I just draw this line and clone it, drag and drop in these points, and you can see this very harmonic action. Market already has completed another one here, and simultaneously take a look at it has formed the butterfly pattern right at the bottom. So here we could expect at least something of that sort, or maybe flat action, if we suggest that no retracement will happen. That's why you could trade the situation differently. If you're an aggressive trader, you could try to trade butterfly directly. So in this case, you will have to take the long position here with the placing stop below 1618. This is how we trade butterflies usually. When the market starts to move up, you should move your stop to the break-even. But this is aggressive tactics, because except this butterfly, we do not have any other signs of the possible retracement. So, and this is not the fact that retracement will start precisely at this area, because as you understand, weekly oversold is a bit floating substance, so it could happen a bit later. Maybe market will drop to the 1618 first, then continue move up, then start the retracement. So this is aggressive approach. It gives you the better entry point, but in this case, you will take more risk. More conservative and safer way to act, you probably should get first some signs of the changing of this tendency. And this will happen if market will break out from this channel and move above the weekly pivot point. If this will happen, this will be at least something. So the existing tendency will be broken, and that will be the sign that something different is starting to happening. In this case, you could try, for example, if market will break out, you could try to enter some retracement, retesting of this broken line or something of that sort. You will get worse entry point, but you already will have some signs that retracement probably has started. So this is only for those of you who would like to trade it on the long side of the market for scalp traders. For others, guys, for our major part of our formulas, we just need to wait when upward retracement will end, and we should watch for reaching probably this area where we start to search for bearish reversal pattern for taking the short. That's our major view on the Great British Pound.